Wells Fargo Home Improvement Loan Features, Strengths, Weaknesses. Wells Fargo offers unsecured personal loans specifically marketed for home improvement projects. Key features include loan amounts typically ranging from $3,000 to $100,000, fixed interest rates, and repayment terms from 3 to 7 years. Funds are dispersed as a lump sum, providing flexibility in how you allocate them for your project. This loan is best suited for homeowners with good to excellent credit scores, generally 660 or higher, who need funding for projects like renovations, repairs, landscaping, or even appliance upgrades. The ideal candidate seeks predictable monthly payments and prefers not to use their home equity as collateral, unlike a HELOC or home equity loan. A significant strength is the speed and convenience of application and potential funding, often within a few business days. Fixed interest rates provide payment certainty, allowing for better budgeting. Moreover, there are no origination fees or prepayment penalties, a considerable advantage over many competitors. The absence of collateral means your home isn't at risk if you encounter financial difficulties, unlike secured loans. However, the loan's main weakness lies in its relatively high interest rates compared to secured home equity products, especially for borrowers with less than perfect credit. The unsecured nature of the loan necessitates a higher risk premium for the lender. Another potential drawback is the loan amount limitation. While $100,000 may suffice for many projects, larger, more extensive renovations might require alternative funding options. Furthermore, Wells Fargo's customer service has been criticized in the past, a factor to consider when weighing your options. Finally, while there are no origination fees, be mindful of potential late payment fees, which can add to the overall cost. In conclusion, the Wells Fargo Home Improvement Loan presents a viable option for homeowners seeking unsecured financing with fixed rates and predictable payments, particularly if they possess a strong credit profile and require a moderate loan amount. However, it's crucial to compare interest rates and loan terms with other lenders, including secured home equity options, to ensure you're securing the most cost-effective solution for your specific needs. Before committing, assess your risk tolerance, project scope, and ability to comfortably manage the monthly payments. Don't be afraid to shop around for quotes to find the best fit for your individual circumstances.